Hello and welcome to Business Today Television. I am Siddharth Zarabi and you are watching Easynomics. With me today is Madan Sabnavis, the Chief Economist of the Bank of Baroda, and we are discussing the latest consumer price index based inflation data for the month of January. And in the run up to this data, let's take a look at the trajectory of CPI inflation so far. For the month of August in 2022 at 7%, rising to 7.41%. These are obviously annualized figures year on year basis. Then coming down in October to 6.77%, November 5.88%. And the latest numbers that we have for the month of January, and they are on your screens, CPI inflation for the month of January at 6.5%. Let's get that number once again. The latest inflation data, the number that we have for the month of January, that number has come in, and that number of inflation, consumer price index based inflation, has come in. Madan, as we get that number 6.52% in January right there on our screens, viewers, your first reaction to this number?
Bit of a surprise, Siddharth, because we're looking at a number of 6.1%. Now it appears to be closer to what the RBI has spoken of, the average for the entire year being 6.5%. So I think this sort of indicates the commentary and the stance which the RBI took in its policy last week, where it has flagged inflation as a concern, not just for this particular year, but also for the next year, while the numbers would be coming down. But it is talking of numbers starting from 5% in the first quarter of 24 to move up towards 5.6% towards the end of the year. So I think we're not really going to get respite from inflation for another full year. And what we are seeing this one, even though it's for the month of January, I would tend to believe that these numbers would remain elevated also in the months of February and March.
Madan, Bank of Baroda, the estimate itself was 6.1%, and I have other organizations. And viewers, I just want to tell you that between Axis Capital at 5.6%, to Sunidhi Securities at 6.31%. No one had estimated inflation at 6.52. Madan, if 6.1 was the number that you were working with, explain to our viewers the higher number that we have seen.
See, the higher number, my guess is, has been on two scores. One is that what we call core inflation would tend to reign above the 6% mark. This is something which we have seen even in the past. But there should be a surprise element in terms of the food products, because food inflation is something which has been moving in the downward direction. But you did notice that in the month of January, there was an increase in the prices of vegetables and fruits in particular. So I think that is something which has probably pushed up this number to 6.5%. So I think a higher core inflation number as well as food inflation would be the two main factors driving this particular number.
Okay, I have the government press release from the National Statistical Office, and just to go through the details, the inflation at 6.52%, and when it's broken up, rural inflation at 6.85 versus 6 of urban, and the combined number is at 6.52. Madan, clearly rural inflation, the one that's higher, and food price inflation at 6.65% in rural, in urban 4.79, a combined number of 5.94. And I'm trying to go through the numbers here that we have for the month of January. The cereals and products is the index number has risen. For meat and fish, a small marginal rise. The biggest rise that I can see here is essentially for the food and beverage. Even that isn't that much. Clothing, fuel and light, miscellaneous. So, Madan, as I see these numbers, it just seems to me that there is across the board marginal. Sugar, for instance, is down. Spices are a bit up. Non-alcoholic beverages a little bit up. And that's it. Just seems to be that there is all across the board marginal increases. In the rural side, this was urban. There is a significant jump in cereals at the index number level, meat and fish, eggs, milk and products. So all of it really, bulk of it coming in from the rural side, Madan, and then we have state level data, but let's leave that for the moment, Madan.
Yeah, so actually, Siddharth, if you see that, if you look at the rural CPI, I think there's a greater weightage which is given to food products. But today, when we are saying that inflation has gone up and food inflation is something which was trending downwards, which has reversed, I would tend to believe that this is mainly on account of the fact that we have seen rural inflation going up. That is, if you keep aside the core number, the core or the non-food, non-fuel inflation numbers, those would also tend to be high. And as regular consumers of products, we have also noticed that in the marketplace, we have been paying higher for a lot of these food commodities, including milk. That's also another thing which has been increasing almost every 2 or 3 months. So I think the cumulative effect is something which we are seeing in terms of this inflation number coming back to the over 6% mark, 6.5% mark for the month of January.
Core inflation, which although it excludes food and fuel, what is the impact going to be as far as core inflation is concerned, Madan?
See, if you look at core inflation, see, most of the core inflation comes in manufacturing and services. So what happens here is that when you have higher raw material costs or your input costs, that is something which companies have been saying continuously in their investor presentation, the investor calls, that they're in the process of passing on these higher raw material or input costs to the consumer. So that's what we are seeing when you see that inflation for things like health, for education, consumer products, personal care products. Now, these have been remaining fairly rigidly in the 6+ region for quite some time. And I think that's what, even entertainment for the matter. So I think these higher input costs are getting reflected, and I don't think these prices will ever come down because this is based on the MRP concept. When I say MRP, it's a maximum retail price. So once the higher the input costs get translated into a higher retail price, the prices remain where they are. And even in case there is correction in the input costs, we will not see these prices coming down. So therefore, it tends to be a bit more rigid than food prices, which could come down in case supply conditions improve.
How is this likely to impact domestic demand? Do you see the revival happening, or what kind of impact do you really see with this kind of inflation number, especially in the rural context?
No, I think this will definitely affect consumption going ahead because we have seen the pent-up demand phenomenon in 22-23, which actually defied logic because when the prices go up, ideally your demand should be coming down. But I think the pent-up demand phenomenon did help to keep demand elevated, and that's one of the reasons why we saw consumption being good, and that's why even your GST collections were good for the government of India. But today we're looking at a situation where it is going to start affecting your purchasing power. People had compromised on their savings last year. Probably that may not happen at this particular point of time. And I think at a margin, we will be seeing consumption getting affected if inflation remains where it is. Of course, the RBI is talking of numbers coming down to the 5.5% range next year. But that also is quite high by our own standards because we have had inflation closer to the area of 4% before COVID times. So I think consumption would definitely be getting hit. And that's probably one of the reasons as to why we are looking at even the GDP growth rate for 23-24 being lower than that for 22-23.
What does this number mean for RBI decision making going forward? This is just 1 month and we saw the most recent action, but what kind of impact would this reading have as far as RBI is concerned?
No, I think as far as the RBI is concerned, I think this number, as I said in the beginning, it vindicates the projections it's made not just for this year, but also for the coming year, which means that as far as policy is concerned, it will become a bit difficult for the RBI for us to think that the RBI would be lowering rates in the next financial year. That seemed to be some kind of a remote possibility at one point of time. But with inflation being where it is, and the fact that we've also seen that global commodity prices could get impacted because of the China factor, crude oil started coming down, came towards 80. We're once again moving in the upward direction. Nothing scary, still in the 80, 90 range. It would definitely mean that the RBI could this could open the doors for another rate hike in case inflation remains above the 6% mark for any reason in the next financial year. So as long as we are in this RBI range of 5.6%, I think it would be a long pause. But in case it goes up, and that was some kind of an indication given in the commentary of the RBI, that there could also be a rate hike, further rate hike, but not immediately.
With retail inflation coming back to 6%, what do you think is likely in when the February number comes out next month?
So the February number, again, by our calculations, should be lower than 6.5. Just like we felt that 6.1 would probably be the peaking of inflation in this particular cycle, that is up to March. But I think one needs to examine which are the components which have really gone up in this particular month, and whether there is reason for us to believe that there could be cooling of these prices. Which, as I mentioned, even something like milk the price has been increased in the month of February. It's been done also in December. So I think these little things are the ones which really add to what you call the marginal increases in inflation in a variety of products. So that's something which month on month could be increasing the inflation number, and that's what we should be worried about. But otherwise, I would tend to think that we would probably not be crossing the 6.5% mark. But we were wrong last time at 6.1, so it could happen again. So we'll just have to re-examine the numbers and see whether 6.5 would be the peak for this particular quarter, or whether there is scope for further increases.
It's also clear with this latest data that retail inflation is now continued far above the target or 4% for almost 3.5 years now, Madan. And this 6%, 6.52% retail inflation and 6.5% repo rate, I mean, it's not happened deliberately, obviously. But in the longer term, does this also now require some fiscal and administrative measures? Because while we continuously talk about the monetary policy and inflation, some of these increases that are visible here at the index level are very clearly beyond the pale of repo rate tweaks, Madan.
No, absolutely. I think whenever we're talking of bringing down inflation, it will have to be a combination of both monetary as well as fiscal measures. See, what monetary policy does is it can curb extra demand forces which could be emerging in the economy, which I think it is probably doing, because you're looking at things slowing down. And we as bankers look at the growth in bank credit, which is slower than what it was earlier. So we would tend to believe that the monetary policy is working in this particular manner. But I think on the fiscal side, there is reason for one to believe that one could still be looking seriously at fuel prices, both at the center as well as state levels. And even in terms of the GST taxes, the tax rates, whether there is scope for some kind of rationalization, because in these kind of conditions, I think we need to have everything to be put together if we want this inflation number to come below 5%. But the way things have been drawn up, and I think if you look at the fiscal calculations of the center, and I'm quite sure a few states also which have announced their budgets, which I'm aware of, they're not really looking at lowering the VAT on fuel. Center is given an indication that they will not be touching the excise duties on fuel again, because the collections are increasing marginally for the year. So I don't think there is any action being done, but unless maybe the GST Council decides to do something on GST rates for specific products. But otherwise, I think while there is scope for fiscal action, but I'm not really expecting anything to be done from there. Therefore, we will have to limit inflation of around even 5.5% next fiscal.
And Madan, it's clear at the index level, the more I see the data, that it's across the board. Minus the fuel and light index, which is static, because obviously we know that administrative action in terms of the daily price movements have been stopped for many months now. But if you look at the index level numbers, it's very clear that the price rise is across the board, at least from this basket that the CPI captures, and clearly it is going to be a challenging time. And you allude to a very important point, and one wonders whether this being a state election year and next year being a general election, Lok Sabha election year, will force the government's hand as far as moderating some indirect taxes are concerned. Do you seriously see that happening?
See, it could happen at a margin, especially since you're mentioning about the state elections. I think at that point of time, it's possible. We have seen even in the past that there could be some tinkering of the VAT rates more from the states rather than the center. Because if the center does it, it will have to apply across the board and will be having an impact on its overall revenue. Whereas the states could make some kind of an interim announcement just before the elections to lower the VAT rates, because I think there is still scope for them to do it, considering the fact that right now I think they have gotten quite a bit of an advantage of not changing their VAT rates. I think that's helped them to collect they shore up their revenues. So I think there is some room out there for the states to do so. But beyond that, I don't expect anything definitely on the GST side, because I think that's something which could be a big ticket, which could be helping to lower this generalized inflation which we are talking of.
Since we are talking of states, Madan, just for those viewers who may be interested in this granular data, Andhra Pradesh, when it comes to the overall CPI at a combined level, which means urban and rural together, the index, there's a marginal increase from 181.2 to 182.3. Arunachal Pradesh, it's actually declined marginally. Assam has declined. Bihar is slight increase. Chhattisgarh has declined. Delhi has seen a slight increase. Goa a slight increase. Gujarat a slight increase. Haryana. I'm just trying to see if there is an outlier here from the numbers that I am looking at, and I don't see a major outlier. In fact, the combined state level data shows that again it's a slightly simplistic statement that I am making, but it's very clear that barring one or two states, the rise of retail inflation is all across the country. Dadra and Nagar Haveli, it's a 2 basis points increase. Daman and Diu also. Jammu and Kashmir is a slight marginal fall. So inflation at the all India level, if you look at it in the combined index, from 175.7 to 176.5. So again, it's a national phenomenon. No particular state seems to have had a spike, and while different states have different weights in the index, Andhra Pradesh has 4.58, Karnataka has almost 5.9, Maharashtra obviously given the size of its economy is 13.18 in terms of its index contribution, followed by Uttar Pradesh. But it's very clear, viewers, that retail price inflation is pervasive, and it is pervasive all across India, from Kashmir to Kanyakumari, really, Madan.
Yeah, so I think this is what we call broad-based inflation. And Siddharth, why this is a bit worrisome, because when we say that the indices are moving up month on month, I think that means that we normally say that there's a base effect which keeps pushing up inflation or bringing it down. But once we see that the indices are actually going up compared to the previous month, that means that inflation is very much there. Prices are increasing, because we should remember that inflation is rate of change of in prices. So inflation coming down does not mean that prices are coming down. It's just that a case of saying that the rate of change of prices has come up or gone down. So I think this is definitely a serious issue as far as we're concerned, because as you mentioned earlier, that this has been for over 3 years that we've been having this problem of relentlessly high inflation. And while quite a bit of it has been on the cost side, but I think there is something which can be institutionally tackled. And this is something which probably the government, I'm sure, is going to look closer at these numbers and probably assess as to what could be the trends going ahead, if at all there has to be any decision taking on looking at revising some of the GST rates.
My final question to you, what do you expect as far as the producers, companies, corporate India is concerned? Do you expect them to continue to exercise their pricing power and increase prices, or do you expect some sort of moderation because they will see demand getting impacted further if prices continue to rise?
No, I think they will continue to increase the prices because as we analyze the third quarter corporate results, if we keep out the BFSI and the IT sector, we have seen that the profits have actually fallen for the manufacturing as well as the services industry. And again, if you see what is the reason for it, it's basically your input costs, your raw material costs, whichever way you put it, whether you're in the services sector or the manufacturing sector. I think their increase has been quite phenomenal in the last year. So actually what's happened is that in the last couple of years, post-COVID, I think the companies were not increasing the prices given the overall economic conditions, the fact there was not much demand. Now that demand has revived, there has been a tendency to try and cover these costs. And we are still in this particular process. So I would tend to believe that even in the fourth quarter, we could be having a similar phenomenon. And that's one of the reasons why I think that they would continue to increase costs, because once you stop doing it, it becomes difficult to do it again. So I think in this particular cycle, they would rather complete the passing through of higher input costs so that they're able to protect their overall profit lines.
And perhaps also shrinking the size, reducing the weight of the packages. I was just seeing a popular meme that is floating around on the internet where a popular chocolate brand is being compared with last year and currently, and how it's gone down 5 grams or thereabouts in size. That's also one of the things that companies resort to. But viewers, it's very clear, if we thought that there is going to be a significant respite from inflation, that's not happening. The latest data, and this is consumer price inflation, which is called retail inflation and essentially pinches all of us. The latest numbers at January reading come out to 6.52%. It's a surprise. It's much higher than even the consensus estimates that we have shown you, and very clearly it will have an impact going forward on all manner of policy. Madan Sabnavis, thank you very much for your time and patience in taking us and interpreting those numbers for our viewers. With that, it's a wrap on this episode of Easynomics. If you've been, thank you very much for watching.